is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you get the Dow off 163, Nasdaq's off 25, S&Ps are down 13, gold is down 2, silver's up 7 cents, platinum is down 4, copper's down 4 pennies. Light sweet crude's off 51. Bonds are up 7 ticks on the 10, 16 on the 30, and King Dollar's down 283 ticks. And you talk about volatility. You talk about market falling out of bed. Isn't it kind of wild?
Everything's moving right now, right? It is.
The volatility, folks, out here this morning is pretty intense. Let me tell you something. Okay, so yesterday we were talking about, it was actually the prior day. No, we were talking about it yesterday. It's really hard for indices. What I've seen is this. We had the NASDAQ go down on Monday and the S&Ps go down on Monday, right? What happened Tuesday is the S&Ps go up on light volume. Yep. The NASDAQ followed through on the way down. Then yesterday, they both go up on light volume. What I've found, you can find more things out. It seems that the market gives more information out doing counter moves than the actual move.
Yeah.
Now, when a move happens like this, to me, that's more confirmation that we're really going south. No. But it still blows my mind that it's so quick.
Yeah.
When I get up this morning, man, folks, the futures were up 8 points this morning.
Yeah,
the S&P futures.
I saw them like flat. I glanced at it,
all up.
and then I stopped paying attention for a while once I saw it was like flat.
I looked at the TV and I went, God, I went outside and got some more bear claws.
You must have found some good ones.
It blew my mind, man. This is what ended up happening. I come back inside. I was working out with Nico. So I walk my dog up to Nico's. It's so cool, folks. We're so close. And so by the time I left Nico's and got back home, I looked up and it was like, what just happened? You know, pretty intense, man. You know? And I just heard our man Dave from Clearwater call Larry.
Okay.
You know,
I didn't hear it. What were they chatting about?
Oh, it was a great conversation, man. Dave is really meticulous. And folks, if you want to really get your head wrapped around trading, you want to listen, you could listen to that conversation because it was really a great conversation. You know, because he's trading the currencies off those fibs.
Yep.
And what seems to happen...
Dave is, right?
Yeah, and Dave was asking Larry about different markets and, you know, where he thinks he should put the stops.
Larry talks about natural gas fibs all the time and just like
Totally. Yeah. And it was a great conversation, man. Yeah. And I'm telling you, folks, you can learn a lot from it. You can really learn a lot from it. And you can, when you're that far, when you're that deep into it, it's really cool because it seems that you can learn so much more so quick. Because sometimes, like he was asking, well, why do they work? And like Larry said, well, I don't know why they work. But but guess what?
That's how things work.
If they work 60% of the time, you can do good. Right. You know what I mean?
Yeah.
And that's a number.
For sure.
That's a number, man. And what does happen, folks, is that, you know, when he's trading the currencies move a lot quicker, and they have been moving a lot quicker.
Some volatility.
Yeah, the volatility.
Big time.
It's huge, man.
Yeah.
And I expect this volatility is going to be huge out here today, and we get natural gas happening, so that's going to be...
Numbers at 10:30.
10:30, baby. Here we go. You know, no doubt. And
so what did happen with the spikes here? Did Draghi come out and say something?
Draghi
like,
come out
in that moment. That's what moved it at that.
But it's like it's no big deal. I mean, it wasn't like, you know, he's been saying this forever. So he comes out, he signaled that the European Central Bank is going to, you know, boost the stimulus program next month as inflation wanes and economic prospects worsen. You know. He's said this a million times, though.
Yeah.
And all of a sudden,
every time you reiterate it, though, it's
well, this one
it reassures at least the market nothing's changed. They were gung ho because.
So he says signs of sustained turnaround in core inflation have somewhat weakened, and of course they're scared about that. I would say that there's no doubt the humanity crisis that they have in Europe is going to be huge. It is huge. Okay.
Yeah.
So that. I think together with that, it's like people realize that, hey, man, they you know, there's...
Yeah, I mean, they're saying that the odds and I'm sure this has to do with the market and where the money is, the odds that the ECB will cut its deposit rate in December climbed to 100% from only 88% right before the speech.
That's intense. Yeah,
so he made it pretty much sure that they're going to cut their deposit rate come December next month.
And I think that
88% is high, but I don't know where they get 100%. But that's quite a number.
That's quite a number. That means not one person is betting. Like if that was our Fed funds futures, it would mean that every single person would be betting that it's up on December.
Yeah.
Now, what's going to be intriguing there is that if in fact, does that mean that we're going to go into a negative deposit rate, which is pretty wild.
Yeah.
If we go look at their bonds just for a second, let's see what's happening. What we will get out here today, folks, is what's going to be pretty cool is the aspect of are our bonds going to have juice behind them moving higher today? Because the bond markets got killed.
Yep.
Okay? And what hasn't happened yet, though, is this, is that it came off the highs in volume, right? But as it went to the swing point, it contracted again. And as to how far bonds have actually moved in the past years, it's not a deep retracement at all.
Yeah.
But of course, everyone's waiting for rates to go up.
Right.
Now, if we see volume as bonds go higher today, that's going to be saying, hey, guess what?
Rates going lower.
They're going to stay the same.
Right.
You know what I mean?
Yeah.
So we're going to learn a lot. Now, in Europe, you can see Switzerland's the trip. Switzerland's still 0.3%. You have to pay Switzerland for 10 years to give them money. France is 0.9. Germany is 0.6. Italy is. The bond market over there kind of is today flat. Actually, it's not green. Our own market. Let me take a look at our own market right now. So if we take a look at the 10-year, we have 568,000 contracts, and that's a big number. That's a big number. You do that next one. Look at that. That's a good jump. We'll see. The 10 would have to do like about 1.3 million contracts today, and that would give us some information. But if you had a follow through like that, that'd be saying, guess what, man?
That'd be great. I hope they keep rates.
I know. Listen, man.
For myself, that's what I'm rooting for. I mean, how can you not in terms of, I guess, if you enjoy the luxury of taking mortgages and,
Yeah. Listen, man. Hey, listen. You know what blows my mind? It's wild, folks. In the context of, and this is just not in the context of politics. It seems like it's the context of politics, because it's even when people aren't running. People just keep saying that the economy's terrible, everything's terrible, and I'm looking around and saying to myself, hold it. Let me get this straight. We're in 2007. It was a depression. The market is up like 200%. There's jobs everywhere. And it's like, okay, and every time when I hear this sometimes, it's like, okay, I don't really see where they're getting it. So the correlation of what people are saying versus what seems to be happening is just different, A
lot of it's been the wage growth, though, with those jobs, right?
It's the wage growth. Oh, no, I understand that. No, it's definitely the wage growth.
The job creation hasn't been...
Right. No, and it has to do... And this has been happening for 20 years. Since first the deflation comes in from goods from China, then it comes in from paying jobs, and then too many people, I think, didn't go into. I mean, you got there's so many people that didn't go into trades, and it would have to be specialized trades, though, whether it's steel workers. Welders, plumbers, do you know what I mean? Something that you could sustain much higher prices.
Yeah.
Because what does happen inside the construction industry, just as a labor, that's still not, that's a low-paying job also.
Yeah.
Do you know what I mean?
Yeah.
Yeah, it's looking like the ES is bouncing right now. So we're down 136 in the Dow. You got the Nasdaq off 16. The S&Ps. Look at the Nasdaq. What just happened with the Nasdaq? Let me look at this Nasdaq. The NQs they were down 15 and now they're down 2. So what's the juice behind here? Let's see. NQZ5. The volatility is going to be insane out here today, evidently. So we just went from we just went up 24 points inside the Qs. We're at, let's see what's moving this. So inside the NQs out here. Okay, the leader is JD.com. That's a stock. That every day the stock's out here. You know, it's so wild. We start keeping track of this. One day it's the lagger, the next day it's the leader. Win is number 2. Now this is where you can get a huge amount of information. So this is going nowhere, but yet the structure, the weighting structure inside the NDX is so big that it shows up almost every day.
Yeah.
Viacom is number 3. That stock's got killed. That's up $1.44. On the way down, Monster Beverage. Now that was up big. That's up down $3.87. This stock has got killed. INCY. That's down $2. This is Biomedical. Yeah, Biopharma. That's down 2. And Kraft Heinz. So let's go look at Apple. See where Apple is standing right now. Okay. Apple can't get out of its way. The IBB, that can't get out of its way either. So this is just a dead cat bounce. That's what it looks like.
You know, volatility today.
Volatility, man. Volatility in space. Well, just when we started it's very unusual when you see the S&Ps move that much. Just like, well, I guess it's not unusual, but
no, it's a big move. I know what you mean. It is.
You know, I mean, just because I've heard drag you so many times, it's like, okay, you know.
Yeah, he obviously had some teeth in it for those numbers to move, and whether that's just analyst projections, for sure.
And there's going to be a lot of more funny money. Hey, did you hear Tim Cook? So we were talking about yesterday. Remember I said that people wouldn't, cash will be like gold. Tim Cook. We'll talk about it. Tim Cook was saying that the next generation is not even going to know what cash is. That's what he's hoping.
I saw some headline.
You stay right there, folks. Tommy and I are coming right back. A dead rat bounce. I have to love it. Good man, Terry. We're going to come right back.
Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 155, Nasdaq's off 18, S&Ps are off 11.5. Let's go to Dave in Lakeland. Hey, Dave, what's going on?
Okay, Well, good morning.
How you doing, man?
Doing good. Beautiful day,
And it is gorgeous, no doubt. No doubt.
Hey, the reason I was calling was, could you give me an explanation or how it works on the unemployment number setting at 5%? We grow 250,000, 270,000 jobs last month, but we lay off 250,000 every week. And there's 5% unemployment, 95% of people are not working. That's 60 job participation. How does that all tie together? How do they get those numbers?
Well, okay, so I understand the argument. There's been an argument for a good period of time that the numbers would be skewed. I'm not on that side of the table, and the main reason is that all the baby boomers, bottom line, are retiring. That's real, and they're out of the job picture. So you can make the argument, and so I think specifically what Dave's talking about, folks, is that the small unemployment numbers have been the lowest unemployment numbers in 42 years. Well.
Yeah, I mean, market participation is, a factor in that for sure.
Yeah, right. Listen, when I was growing up, everyone was dead at 65. Seriously. I mean, all my uncles and aunts, they all died at 65. Now people are living at 65, and some of them work and some of them don't want to work. So that's a huge part of it, Dave.
So the people who are considered could work but aren't are retirees?
That is exactly. Yeah. Yeah.
I thought they had a cutoff. Like when you hit 18, you're considered in the job force.
No. So the participation rate. There's a lot of different things that happen. The participation rate itself, okay, has to do with. You have a lot of people, that can work 20 or 25 years in a job and retire, and they're still only 45 or 50. If they don't want to do anything anymore and they want to work under the table, they can. Okay, they're out of the job force. Yeah. There's plenty of people that. 50 and 60 that definitely aren't working and say, okay, I just want to do something else. They're out of the job force. That is the largest portion, well, it had been the largest portion in the United States. Outside now, Tommy's age from 35 down to 14 is the largest portion.
Yeah, it's just whether they're looking for a job, so that can be interpreted a bunch of different ways.
Right. Right.
So in other words, like I hear that when they run out of unemployment, they drop off, which brings the unemployment number down. But if you're saying those people don't get counted towards the 5% that we have, or the retirees, but they're still counted in that number for job participation.
That would be correct.
Okay.
And my larger take on it is, man, there's jobs everywhere. You
Yeah,
know,
I know.
we're
Well,
in
yeah,
Florida.
I
You
see
can
that
get a
too.
job everywhere you want. You know,
Well, I think-
there's jobs. You walk down the street, man, and get a job. So
I think a lot of it has to do with there's jobs out there, but I know people that aren't qualified for them. You know, they drop out of school, they don't get the, you know, they don't apply. Period. You know. But
listen, there's plenty of people that don't want to work, and I understand that
I
too.
know.
You know, and unfortunately, what does happen if you get in a rut like that, then you get in a rut. You know what I mean? And
I know, yeah, right. You lose. Really, I've seen it. You forget how to work. You lose your work ethic.
odd that, you know, you just groove and you say, hey, why the heck should I work? I'm grooving it every day. I mean, you know, it's really I've seen both sides of it, and many times, okay, I've even seen, you know, some of my friends that I love say to myself, man, you know what? That's not a bad deal. Just kind of grooving. Do you know what I mean?
Yeah, I know. I've known people that get an insurance settlement, figure out a way to live on it. So
yeah, it depends. That's right, and it absolutely depends on how much money you want to spend.
Sure.
You know, there's plenty of smart people that can spend a lot less and are very happy doing that, and great, they can work out every day, get down the beach, they can go fishing, and that's a great lifestyle too.
Well, anyway, it just seems ironic to see 270 people unemployed, new numbers each week, and then they come back with new jobs at the end of the month. The new jobs are only 1/4 of that, and everybody thinks it's great. I don't know.
Well, that's the net amount, though, Dave, just so you know. So that's factoring in jobs lost versus jobs gained. That can be a net negative when there are jobs lost. So that's factoring in anything lost versus anything gained. That's a net number.
Yeah. That helps the number, that's for sure. Anyway, my other question, Tom, was regarding Valley.
Yeah, hey, you stay right there as soon as we come back.
Okay.
And that Valley has to get over 403 to 409. We're going to be right back, though, folks. Dow's down 166, Nasdaq's up 24, S&Ps are down 13. We're going to be right back. If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
On it anyway. Would have been nice to have it come up. Welcome back, folks. Dow's down 180, Nasdaq's off 26, S&P's are down 14, and this little baby's accelerating. We're talking with Dave from Lakeland. We're talking about Valley. So what I wouldn't do here, Dave, is this. I was bringing this up yesterday for a Tiger, and if we pull this back, what you want to see at the end of the month is that this thing has to hold, let me get the exact number. It was $4.04, I think.
Yeah, 403, 404.
Yeah. And I know it's only 3 pennies below it, but, man, I wouldn't be buying it right now. I'd wait. Because if that doesn't hold that area, man, then you got $1.75. So.
Right, exactly. I see that. My question, one of my questions about it was that it's part of the EWZ Brazil ETF, correct?
Let's take a look. So the EWZ. Okay, that objective is to get investment results of the MSCI index. Sometimes I get, okay, so here, I get, well, no, I have the largest weighting structures, and it's not in the largest weighting structure of the top 10. Ambev is actually the largest, which is. Would be. That's 10.4%. That is an Italian company, 10%. No, it's not. It's. I have the top 10, and the last number 10 is 2.8, so it's below that. Yeah.
What I do notice is the EWZ, whatever direction it seems to be going, is what Valley does.
Yeah. You know, that EWZ is not a bad setup on the way up.
It's not.
No, it looks like, I mean, that's good. Got destroyed, but I like how it's come off that bottom. Let me just look at this on a monthly. Well, on a monthly, this has work to do, too.
Well, I think Brazil's got work to do. I think that's the major problem.
Yeah,
you know,
no doubt, man.
Petrobras and all that stuff, and you know, everybody down, like you've said many times, they're all involved.
Yeah,
you know.
And they just haven't got caught yet in the Valley deal, probably. You know, but
either they're really clean or really good, right?
Yeah, right. No doubt. Have a great one, man.
Thanks, Dave.
All right, thanks, Tom. Appreciate it. Have a good day.
You too. Bye-bye. Let's go to Ken in Kansas. Hey, Ken, what's going on?
Hi, Tom. Thanks for taking my call.
Sure. How you been, man?
Been good, yeah.
Good.
Wondering about DuPont. I think they're talking about somebody buying their seed company. I'm just wondering how that's going to affect them.
Let's take a look. So you get DuPont. The low for the year is 47. The high is 76. They do a 2.2% dividend. Oh, interesting. Okay, so let's bring this back.
It's quite a little chart, huh?
That's amazing chart. All right. Now, you own this?
I have. I worked for them for over 30 years, and I bought some stock back then, so I've been retired for over 20.
Okay, cool.
So I've held the stock for quite a while.
It's a nice couple months.
Yeah, so let's bring this back. I mean, my first take on this is that it'd be a sell right now, okay? But stay with me for a second, because there's a lot different when you're owning the stock for 20 years versus,
trading it.
Yeah, and getting a dividend and all of the above.
Yeah, I'm kind of like with it, like you are with AT&T.
Exactly, exactly. So now the question is, where could it go on the way down? Right there. Okay, so on the way down, you get like $50.70, right? That's kind of how that's set up on the way down. Where I'm going there, Ken, is that's August of 2011, right?
Right.
I'd hold it thus far until you see another downdraft, I think. Because what happens is this, like when I look at that on a monthly, this doesn't look like the market, but yet, I think the market's going to go south and we'll take everything. But you can see on the monthly, see how that went down, Tom?
Yeah.
On the monthly, folks, what happens is this. We come down in June at 116 million, 130 million in July, and 132 in August, right? Well, we went up in October with 167 million. That's positive, man. That's a direct opposite correlation of a stock that wants to go down. I think, market-wise, I think we're going to take a hit, but it doesn't mean that, can you live with $50? That's
I'll
it.
have to look at that, won't I?
Yeah.
Huh?
Yeah.
He said I'll have to look at that one.
Yeah, that's kind of the correlation. Do you know what I'm saying? But
Yeah.
And now remember something though. Inside that correlation, you want to calculate what you're going to pay in taxes too. And folks, this is a different conversation. I really want you to understand this. You always want to pay taxes, but when you have something that is this long, you got to think that through.
Of course.
You know what I mean? Because it's like, okay, hey
there
man,
could be mammoth tax implications. Right?
They could, and you still want to put a stop in because we know everything can go to zero, okay? But but the reality is that that makes a difference because what you want to know is that what you get in your hand, okay? And in DuPont's case, DuPont's not going away, so that's a beautiful stock to have. Inside the larger aspects of how we go up and down. The Exxon Mobils of the world, the DuPonts of the world, they're going to be there. You know what I mean?
Yeah. You got time to take a look at PSEC. It's a small bank.
PFCC?
PSEC, Paul, Sugar, Edward, Charlie.
So this is Prospect Capital.
Right.
The company specialized in late venture, middle market, mature bridge transactions. Prospect. Is this the one that advertises all the time, too? I wonder if it is. Okay.
I don't know.
So this one here, I'd be careful with this one, man. Yeah. This looks to me it wants to go lower.
Okay.
Yeah.
Well, I was kind of looking around $7 and looking at it and buy it. Is what I was looking at.
Yeah. Well, let it go down there. 704. Yeah. Say that last downdraft in September. That if it breaks that and the volume expands, don't touch it, man, because then it's going to go down to that 550.
Yeah. Okay. All
Cooking,
right.
brother.
Thank you. You guys have a good day.
Awesome,
Ken.
man. Have a great one.
Bye.
Have a safe one. It's a tough one when you got a good company and it's a long period of time, and then what are you going to do with it?
Yeah.
You know?
It's completely different from most of what we talk about.
It is.
What you're talking about. That's really estate planning. I'm sure that's a portion of his retirement.
Right.
And so,
Right.
when you make those decisions, like any financial planner really would, you'd say that you want to consider everything in terms of what are you thinking, why are you selling this? Are you going to take all that revenue and need it, right now?
And what are you going to do with it?
Right.
Because the dividend there is 2.34%. So you can't make 2.34%, folks, in a CD. And you can make it 5% in the Tiger Fund, but that's 4 years. But but you can't make it. You can't make it in this market. Do you know what I mean?
And there's other ways too, and I don't know how complicated Ken gets, but really, if you could look at things like selling options.
I was going to say that to him.
That gets really sophisticated on the same side. But
well, here, let's do it.
That's different ways to recognize revenue on the short term.
Okay, Ken, let's go through this. We're going to go through this for you. It's worth it. I was going to go through that because I think
it's tough, because you can just buy and hold,
But watch this. Okay, so what we're talking about here, and we'll just walk you through it. So you could sell calls on this. So let's say you got 1,000 shares, right? Let's say you got 100 shares, okay? And it's at 66.49. You can turn around, and this is where this gets interesting. So let's see. I'll go out. Let's just go out. What month are we in? This is November. I'm going to go out 1 month, right? Let's go. So if you went out to December, and this is pretty cool. So look at that. So if you went out to December, you could be selling 67.50 calls and getting like $125 per 100.
Right.
It's not bad. That's, yeah. And so what that would mean...
those can only get exercised if it rises to 67.50, correct?
That's correct.
Yeah.
That's correct. So, and what does happen there is that, if we're tracing to $50, well, you can collect that income on the way down. Now, if it gets a strike price, you'll have to sell them. So if you're going to do that, what you'd want to do is that you know that, okay, you're already selling them.
Yeah, you have to be prepared to sell it at that strike price.
At that strike price.
Yeah.
But what ends up happening, of course, is that you get the 67.50, so you really end up with 68.75.
Right.
Right. So that's not a bad way of getting extra income, owning inside a portfolio.
Now, the tough part is, of course, you're still owning the stock, so you still have downside exposure.
Big time.
And,
you have downside.
You're only getting about $1.23 off of your 66.50. So anything below, 65.20.
That's right.
You start, you're losing
money.
Yeah, and that's why it's a little complicated, but it's worth considering.
No, it is.
Because as you're pulling in that revenue, you're going to be paying taxes just there, not on selling that actual asset.
Exactly. Huge.
Depending on your situation.
Let's go to Tom in Massachusetts. Hey, Tom, what's going on?
Hey, Tom, how are you this morning?
I'm doing great, man. Yourself?
Pretty good, thanks.
Cool, man.
I'm looking for an entry point on the USLV. I'm thinking about jumping into that.
Let's take a look. This is the Velocity shares 3 times long silver. So this is the leveraged position inside of silver. So let's go over first SIZ 5 and just take a look at the silver market in general. Okay, so look at that. Silver hasn't done much. Okay, so silver intraday today. Look at this. Oh, this is wild.
It's done a little bit today.
It did a full retracement.
You're probably right on those Draghi comments because it spiked and then they're like, that really wasn't that big of a deal, right?
Yeah.
I mean, that's what that is.
No, it is.
That was oil, gold, silver,
that's
everything.
Pretty intense.
Everything did.
So what silver did here, now this is what the cool thing is, okay? What you could do is this, Tom. You could get into this position right now. Now watch, but if you did that, right, absolutely, you would not stay in this position unless this thing moved today. Because what we've just done 100% move of a move, okay? So if it hangs down here, then that is saying that, hey, guess what? Gold and silver is going to have more problems.
And just to be clear, are you talking about just that move since this morning?
Yeah.
Okay, yeah. No,
Exactly.
Right.
Do you know what I mean?
Spike up and pull right back.
You're at the beginning. You're at the end of it. It's like, okay, man. Like if.
Well, that's a great point where you could just put your stop in, like you're saying.
That's it. Yeah. You're at 11:09. You can put your stop in at 10:97.
Right.
And you'd want it. I'd want this to be up to at least 11:28, 11:30.
Something.
Yeah. Then you want to see a charge forward once again. And if you got that, guess what? Your probability goes higher. If you don't get that, do not stay in it, though. That ain't even clear. In fact, hey, I want to go over to gold. See, gold's doing the same thing. What a wild market this is going to be.
Yeah, no, I looked at all 3 of them. It was gold, silver, and...
Look at that.
Yeah.
So that's a little trader's paradise, though, because guess what? Intraday, that's up there. Yeah. Hey, man, if you do it, those are the parameters, I would do it inside of, man.
Yeah, just keep a tight stop on it, okay?
Yeah, and at the end of the day, though, man, that should not be negative. Right now, silver's negative and gold's negative. If they are negative at the end of the day, do not stay in it, man.
Don't just let it linger, he's saying.
Yeah, we're going into a Friday. Friday in the metals market is vicious. Okay, don't stay in it. If it rejects lower price and both of them are flat, yeah, you're in good shape. Well, you're in better shape. Okay, but if they stay low, don't stay in them overnight, man. Don't do it. It's not worth it.
Okay, thanks for the advice.
Cooking, brother, man. Have a great one. Man, there's volatility out here today. Holy cow.
Yeah. And that is, I like trades like that where you just have 3 different areas in the past where you just add an area and you can make a simple trade where you're like, okay, if it goes below this, I don't know where it's going. I'll just set my stop right here, buy it, and then.
Doesn't it seem easier psychologically too?
Yeah. You know what you know where you are. You have a plan.
I love those trades. I love those trades because what happens, folks, and you know, this is the sad thing in this business is that there's plenty of people that will say that those you know, you don't want highs and lows. It's like, hold it. I don't want the middle, because the middle is the thing that blows my mind. I have no idea.
Sure.
Do you know what I mean?
Sure.
It's like, oh, where can I put my stop? Where can I? When they're at highs or lows, it's like you just put them on the other side. You're either going to be right or wrong, and normally it's pretty quick.
Sure.
You know what I mean?
Right.
You know,
and that's like different than if you're just looking for like quick momentum, where you can be in the middle.
That's
somewhat, you know, because it started or what you're not picking that easy. But same thing, you just have an area where you have your stop. But this is where.
And there's no doubt, a momentum trader is different, and they're momentum trading, folks. When you do it correctly, is very popular and can be very lucrative.
Sure,
there's no doubt about that.
You can catch those little patterns.
Oh yeah. Oh no doubt. Do you know what I mean? And you know, and the market moves with momentum a good time of the year. You know, a good part of the year. There's no doubt about that. So if we look at let's go look at the volumes first, just to see how we're setting up out here. And we get our man, Mr. John Logan, doing the workshop tonight, right?
I know.
I can't wait.
He's going to be going over his TAS Profile Scanner Plus.
Yeah.
Everyone should go get their free trial right on the front page of TFNN. Just your name, email address. Send you the download link. Send you the information for the webinar tonight. If you can't go tonight, get the archive.
Right.
But you have to subscribe to TAS. It's not going to be on Tiger TV or anything like that.
Right.
You know, get the software. You should try it out regardless. It's awesome. You know, he's always talking about it on his show. So if you've seen the program, I'm sure you've seen him use it.
Exactly.
Give it a try. It's awesome.
So check this out in the SPY, folks. This is going to be wild. I mean, we've already done 33 million, and you only need 130 million. And we're an hour, so you get 6.
Yeah, there's been some volatility this morning.
Oh yeah, we're gonna blow that away. We're gonna do like 150 million versus 130. We might even do 170.
And we have crude oil numbers coming out at 11 o'clock.
11 o'clock. Here we go. Dow's down 152. Nasdaq's up 18. S&P's are down 12. We're gonna be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
150, Nasdaq's off 19, S&Ps are down 12. And home prices. Home prices just come out. Home prices climbed in 87% of the U.S. metropolitan areas in the third quarter. The median price of single-family home rose in 154, 178 areas across the country.
And where was the biggest?
And guess what, folks?
Did you see?
Guess what?
Did you make it that far in the article? Have you found out where the biggest is? Maybe. Yeah.
Folks, this
you see that smile on your face?
Okay. The biggest increases were in 4 Florida metro areas: Tampa, St. Pete, Clearwater region, Naples and Marco Island, Cape Coral, Fort Myers.
And Punta Gorda.
And Tampa topped them all at 20.7%. And bottom line is that it's on fire down here. That's the bottom line.
It's a beautiful area, standard of living, cost of living.
Right. And what has happened, we're still buying houses that off the courthouse that are in foreclosure, but as I was just saying to Tommy, we're paying 40% over assessed value right now. We put a house for sale last night. I don't know if I think I told you this yet. I put a house for sale at 3 o'clock in the afternoon yesterday. I sold it at 7 o'clock last night. And I'm still taking bids this morning. They're calling right now since we've been on the air.
You're still taking bids. You didn't sell it yet then.
Well, I haven't signed the contract
yet. You can't have it both ways.
Well,
you can't have it both ways. You didn't sell it and you're still taking bids. I'm just saying. I'm giving you a hard time.
Well,
yeah, I know.
Because it's already over the
I hear you.
It depends on...
You hear me too. Go ahead.
It depends on how fast the cash is going to come in and what the parameters are inside it. Yeah. Well, we haven't sold it until you got the money in your hand, so that will be a while. But bottom line is that that's impressive.
No, for sure.
That's impressive.
I agree.
And what it is still, though, is that it's coming off small numbers. But the place is gorgeous, man. You got to come visit us, folks.
I mean, the market between like $100,000 and $250,000 in Florida is amazing.
It is. Yeah. It is. And when you go, there's plenty of people that live across the country. Like you'd be in shock.
You're talking about down here. 2 streets away from the water and
$1 million. Well, where you live is like insane.
Yeah. Right. No, there's beautiful areas everywhere, and you're not far from those areas.
Right. Look at this NASDAQ. The NASDAQ's going positive.
That's a bounce.
Yep. Boing!
So let's talk about Everbank, their metals hedge CD. Today's the final day for their funding deadline. Now all you need to do is call them, open an account, and you can get that funded in the next few days, just as long as you open an application. Right. So that's where you're short 25% gold, 25% silver, and then
You're long gold and silver,
long
short
gold
the
and silver,
S&P.
short the S&P.
Right.
So that's today. That's really give them
and that type of CD, you cannot lose money in.
Yeah, so it's a market. We'll do a good job. So it's a market-safe CD.
Yeah.
It's a 5-year market-safe CD. And
Right.
there's a $1,500 minimum investment. That's
Okay.
a great minimum to have a CD money where your capital's protected and you have upside for gold, upside for silver, and
Yeah.
upside you're protected if the S&P/Y pulls back.
Right. And in the course of 5 years, folks, you have 45% capped upside potential. It's not bad.
So their number, 855-750-4051. They have people there that can talk to you about the product, explain the details, so give them a call.
And you stay right there because our man, Mr. Basil Chapman, is going to be coming up next. He's going to be growling proud with you, Steve
And sign
Rhodes.
up for John Logan's Taz Profile
Yeah,
Scanner
I
Plus.
can't
Go
wait.
tonight. Andy Hecht is next week. He had a new issue today, Thursday's Technomental Commodity Report. That's
Okay.
right on the front page as well. You can be reading that right now and going to Andy's as well next week. Free trial, same thing.
Look at this.
Lots of
bro.
good stuff.
Huge. And it's all right in the front page of TFNN, folks. And John Logan's is 6 to 7 tonight. Now, if you can't make it live, don't worry because it is archived on your page for
Right.
30 days.
30 days.
30 days is archived on your page.
Watch as many times
But
as you want.
If you can be there live, be there live. I'm going to be there live.
It's going to be in the chat room.
Because
Exactly.
you can use it
You can
tonight.
ask him questions. You know, he does such a good job. So
He does. Dow's down 114, Nasdaq's on 9, S&Ps are off 8. You stay right there, folks. Basil's coming right up. Tommy and I do appreciate you growling and prowling with us.
thanks, man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.